Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we mostly will talk on the Great British Pound, but in the beginning of the video, just a snapshot on the Australian dollar, since there we have the setup that we have discussed yesterday. So you can see the upward action has started precisely at the point that we have discussed in our recent video. So upward action stands underway. So if you still keep long position here on Australian dollar, you need to at least move your stop to the break-even or even slightly higher. Protect your profit from the volatility that will happen on the non-farm payrolls release. So this is definitely some kind of the retracement action because it's very choppy, lots of overlapping candles. We don't have any significant signs of thrust. And if you do not want to take the bet on the results non-farm payrolls release, it's better to think about maybe taking the profit. Or at least, as I said, manage your stop and tight your stop slightly higher. So, but as you can see, trade has started nice, and in fact, the Australian dollar has used the last opportunity for a boost to turn the situation up. And that really is going on right now. So now on Great British Pound, as you understand, in the shadow of the recent events and the shadow of the Bank of England meeting, we just can't ignore the processes that we see right now on the Great British Pound. So, guys, previously we already talked about the difficult situation in the United Kingdom economy. This is not just due Brexit, but this is also just some fundamental processes are going there. And those of you who are reading our weekly research probably remember that last week we have brought the Fathom Consulting report on United Kingdom economy and the British economy. So the overall idea that as far we will be moving in time, as worse situation will become. So actually, they see that the Great British Pound will remain under pressure due to some fundamental factors, at least within the coming half a year. And in fact, August and September was the last months where this was comfortable and at least possible rate increase by the Bank of England. But the result of the voting, as you can see, it even stands worse than the previous one, because here we have 6 against 2 voting on the keeping rates unchanged, while on the previous months we've got the 5 against 3. So the situation even become more dovish, and that of course depress on the Great British Pound. So right now situation on Great British Pound relatively simple because we understand the fundamental picture and we know that it's bearish. We have the long-term charts where Great British Pound also stands bearish. That's why in the short-term perspective the downward action could continue, because even from the technical point of view, as I said, recall what we said yesterday, the market has completed our major targets. So this minor ABC target has been completed, it's 100%, and our major 1618 target of this initial ABCD has been completed. That was our destination point. Market reversed down on the voting yesterday. Besides, right now, I will just delete this. Don't need it anymore. Right now, it's also resistance and weak lever bot was here. So yesterday, market has formed a bearish reversal session. So take a look, market has opened, created a new top, and close below the lows of the previous session or even 2 sessions. This is called as a reversal session. Usually reversal sessions has some continuation down, and it's really simple to imagine, because currently, guys, the Great British Pound will be under pressure on any relatively positive non-farm payrolls release, because the balance between these currencies in terms of the rates now stands not in favor of Great British Pound based on the recent voting. So if on euro investors right now are encouraging of the schematic of the coming normalizing in the fiscal policy by the European Central Bank, and everybody is waiting for European Central Bank will start to change the rhetoric in favor of rate increasing. The fundamental stats in the European Union right now are growing, but in the Great Britain we see the opposite situation. That's why here is relatively clear that Great British Pound stands is a bit weaker in relation to the United States dollar. That's why if today we will get normal non-farm payrolls around the consensus numbers, then we could see further downward action. I even do not talk about the better than expected non-farm payrolls data. So today, Reuters poll suggests the 183,000. This job should be created. So if drop will happen today, guys, the next destination point will be 130, because here we have the fib level, daily average sold, and take a look. That's also monthly pivot support one. Right now, market is calling around MACD predictor line. So here's theoretically grabber is possible, but it's very difficult to say definitely whether it will be formed or not, because we have non-farm payrolls release ahead. So to understand, it's not a good idea trying to forecast what will happen. So on the 4-hour time frame chart, overall situation looks bearish because we have the plunge down, very strong action, tail close, and take a look, some kind of the pennant consolidation. This consolidation stands right above long-term trend line that also has the bearish sign. So usually when the market shows the consolidation at some support area, it very often leads to further breakout down. As you can see, weekly pivot support one stands at 130.27, also very close to overall 130 target. So that will be probably next destination. And if a drop will happen today, so probably market could reach this area today. So taking all this stuff into consideration and also the positive ADP report, it's a very big chance that non-farm also could be positive. That's why I take a look at the hourly picture. So guys, I'd not call to do it to everybody. So because the trading non-farm payrolls is not for everybody. But if you still would like to try to be involved in this process, and if you would like to go short on Great British Pound, here's the setup that could be interesting for you. Take a look at 131.70 area is the significant resistance. So this is the fib level of this runs down yesterday. Also here we have A, B, C bottom, D target, and this CD leg is already shows very slow speed. It's flatter and slower than AB. And also here market could form some kind of the butterfly sell with the same 131.63 area approximately destination point. So this will be the level that we should keep an eye on during today's session. So if market will reach it, we could think about maybe taking the short position if you're not scaring to trade within the non-farm partials. Also, guys, pay attention that here actually we have nicely looking. I will move it out. Take a look at here. We have actually nicely looking morning star patron. This candlestick very accurate. As you can see, here was the patron retracing back inside of the body, and usually the target of this patron stands in the length of the bars. So you should count it to the upside. Here approximately we'll get the same destination point, somewhere around 131.71. So that's what we see right now on the Great British Pound, and overall situation looks interesting. Fundamentally, in the long-term perspective, Great British Pound is the most attractive currency because it's rather clear with the fundamentals and with the technical steps. Today, of course, the driving factor will be non-farm payrolls, but overall technical picture now mostly suggests a further drop, and taking into consideration NDP reports, probably, well, maybe it makes sense to trying to take short position. Maybe it will be successful because previous momentum is still strong in the market. Investors are still thinking about what Bank of England said. So that all the stuff will press on the Great British Pound, and it will be a bit easier to go down compared to other currencies. I mean, the euro currency stands in March, and even positive numbers will be released. Euro currency could show some moderate reaction, not really strong. But on the Great British Pound, it's a quite different story. So that's why I think that you could think about the cable during today's session.